Iraqi Dinar Today latest news, and we begin our broadcast with a developing story that has captured the attention of the global financial community. The focus today is on the momentous shift taking place within the Southeast Asian economic sphere, a development that signifies a critical juncture in the monetary history of Vietnam. We are now in December 2025, and after years of speculation within financial and investment circles, credible reports confirm a major revaluation of the Vietnamese Dong, the nation's currency, officially known as VND. This is not a sudden, unpredictable event, but rather the visible manifestation of a comprehensive and long-term economic strategy that has been carefully executed over many years. This dramatic currency event represents the fruition of sustained economic planning, institutional groundwork, and continuous market observation. For those who diligently track the performance and evolution of emerging markets across the globe, this confirmation marks the culmination of decades of national effort. The revaluation is being widely interpreted as a necessary correction of the VND intrinsic value, moving it away from its historically lower position to one that is truly reflective of Vietnam's considerable and modern economic strength. The intensity of activity following this announcement is palpable, drawing immediate and widespread scrutiny from financial centers worldwide. The years of hushed anticipation, theoretical modeling, and varying market projections regarding the VND future value have finally given way to concrete fact. What was once confined to the sphere of unverified discussion and conjecture on digital platforms has now been officially validated by authoritative, institutionally recognized sources. This pivotal development is being acknowledged by major global financial stakeholders, including prominent central banks and the world's most influential international investment firms. The global community is observing a sweeping currency valuation adjustment that numerous financial experts contend has been long overdue, aligning the currency's strength with the country's demonstrable growth. This is not a matter of pure luck or a speculative windfall, but a fundamental realignment of global currency principles. Analysts are clear that this revaluation is a rectification that addresses the persistent undervaluation of the Vietnamese Dong relative to the country's significant real-world economic output and impressive growth metrics over a considerable time frame. To fully appreciate the scale and significance of this monetary shift, one must consider Vietnam's formidable economic journey over the last decade. The country has undergone a remarkable metamorphosis, transitioning from a nascent emerging market into arguably one of the most vibrant and powerful financial engines in the entire Southeast Asian region. Vietnam's economic ascent is a narrative of overcoming historical adversity, including long-term challenges of post-war recovery and a previously constrained infrastructure. The nation has successfully pivoted into a forward-looking economic powerhouse driven by strategic national planning. This transformation has been powered by several key factors: an exceptionally strong and expanding manufacturing base, the development of robust international trade relationships, significant investment in technological growth, and a track record of consistent expansion in its gross domestic product. These elements collectively form the foundational strength that validates the currency's new standing. The groundwork for this revaluation was meticulously laid through the country's proactive embrace of economic and structural reform. Crucial factors contributing to this moment include a climate of political stability, the emergence of a young, highly adaptable, and technologically proficient workforce, and a national leadership consistently committed to reform-oriented policies. These conditions have cultivated the optimal environment for a managed monetary revaluation to occur, sending a clear and unmistakable signal to the international community that Vietnam is ready to engage with the world at a new, elevated economic level. Furthermore, Vietnam's deep and strategic involvement in various international trade frameworks has played an indispensable role in strengthening the foundation for this currency move. Its active participation in agreements, such as the Comprehensive and Progressive Agreement for Trans-Pacific Partnership (CPTPP), has dramatically boosted confidence among foreign investors and solidified the nation's economic base. Economic interpreters view the revaluation of the VND as far more than a mere adjustment of the official exchange rates. It is the formal, institutional endorsement of Vietnam's new and elevated position as an undisputed regional economic leader. The international financial system's response has been both immediate and comprehensive. Financial institutions around the globe are mobilizing rapidly to process and incorporate the new currency reality into their operational structures, from the treasury desks of major central banks to the operational centers of large-scale investment management firms. The intricate machinery of the global financial sector is running at full capacity to integrate these validated valuations into all of their existing operational and reporting frameworks. This urgent, system-wide recalibration underscores the profound nature of the change. Within the high-pressure environment of trading rooms and financial control centers, the reaction is one of focused urgency and massive logistical undertaking. Foreign exchange trading desks are swiftly reprogramming their sophisticated algorithms and trading parameters to accurately reflect the drastic and confirmed shift in the VND intrinsic value. Currency exchange businesses, encompassing both traditional physical bureaus and modern digital platforms, are rushing to update their rate boards and online interfaces to display the confirmed official figures. Banks worldwide are issuing high-priority internal directives to their branch networks and digital teams to prepare for an anticipated surge in both transaction volume and customer inquiries. This financial episode extends far beyond the borders of Southeast Asia, cementing its status as a global financial moment that demands the immediate attention of every serious investor and market watcher internationally. The sheer logistical scale required to update the myriad of systems, spanning trading platforms, banking software, and regulatory compliance checks, highlights the magnitude of this currency reset. Institutions must ensure their platforms remain compliant and maintain absolute data accuracy when confronted with such a dramatic shift in a major currency's valuation. To fully grasp the financial implications, it is vital to look at the specific mathematical adjustments driving this revaluation. Prior to this event, the Vietnamese Dong's exchange rate against the United States dollar typically hovered near $23.5 $100 VND for 1 USD. Under that framework, a holding of 10 million VND was internationally considered a modest sum, valued at roughly $4 $125 USD. However, under the newly confirmed metrics, reports suggest that one single VND unit could now be valued in the estimated range of $0.47 to $0.50 USD. This fundamental adjustment entirely transforms the currency's value proposition. In concrete, practical terms, this astonishing mathematical correction means that the very same holding of 10 million Vietnamese Dong, previously a relatively small amount in international trade and investment, has undergone a transformation in value capable of dramatically altering financial portfolios overnight. This change fundamentally aligns the currency unit more closely with prevailing international standards and established currency mathematics. Crucially, these new figures are not the product of internet speculation, but reflect confirmed institutional metrics that are being adopted and integrated across major financial platforms worldwide. This serves as the clearest, most undeniable evidence that the VND had been significantly undervalued for years. The precise timing of this revaluation is a reflection of intentional, strategic alignment rather than a random event, resulting from the convergence of domestic economic strength and favorable global financial shifts in late 2025. Vietnam's consistent, robust economic performance, characterized by controlled inflation, strategic industrial expansion, and unwavering political stability provided the ideal window for this necessary recalibration. Policymakers deliberately waited for the moment when domestic financial health intersected perfectly with accommodating international conditions to ensure the transition was executed with maximum effectiveness and stability. The significant restructuring of global supply chains over the past few years has also strategically elevated Vietnam's standing as a highly preferred manufacturing location, particularly for companies seeking diversification from other major Asian markets. This geo-economic shift has given the nation additional commercial leverage and increased its economic significance, lending strong support and justification for the move toward a stronger national currency. Vietnamese policymakers, in close consultation with key international bodies like the International Monetary Fund and the World Bank, identified this time frame as the critical tipping point where global financial recognition absolutely had to align with observable domestic economic performance. What appears to be a sudden announcement to the wider public is, in reality, the outcome of years of painstaking strategic coordination conducted behind the scenes by economic leaders. This high level of meticulous planning ensures that the revaluation is not a chaotic, destabilizing event, but rather a carefully managed, transitional process. The entire move is expertly engineered to seamlessly integrate Vietnam more fully into the top tiers of the global economy, granting it a financial stature commensurate with its rapid development and future potential. The success of this managed transition is a testament to the country's disciplined approach. On the ground in Vietnam, the atmosphere is described as being intensely energetic, characterized by a powerful mix of immediate excitement, profound relief, and an overwhelming surge of national pride among the populace. In bustling metropolises like Hanoi, Ho Chi Minh City, and Da Nang, as well as in smaller towns and villages across the country, citizens are congregating near banks, offices, marketplaces, and public squares to follow the breaking coverage of this historic financial announcement. Families who held onto the Vietnamese Dong for years, viewing it as a long-term investment or a core component of their savings, are now witnessing the tangible, life-changing results of that enduring financial commitment. Business owners are immediately entering strategic discussions on how best to reinvest the capital that has suddenly and dramatically increased in purchasing power. Reports indicate that educational institutions have temporarily halted normal classes to broadcast official government explanations of the revaluation, underscoring that this is not merely an economic transaction, but a massive and shared cultural moment for the entire nation. Simultaneously, in key financial hubs across the United States and other major economies, institutions are rapidly assimilating the new data into their core systems. Internal updates from major banks hint that back-end infrastructures are already reflecting the dramatic new VND valuation in real time. Public-facing announcements are being deliberately rolled out in a measured way to prevent widespread confusion and market overreaction, yet experienced traders and foreign exchange analysts are already detecting clear signals of the monumental change within the streaming data. Some electronic trading platforms reportedly displayed updated, higher valuations momentarily overnight before being briefly taken offline for complete recalibration, a necessary and expected procedure during a financial event of this scale. The resulting ripple effect is instantaneous and global, forcing every segment of the financial industry to focus on how this revaluation will fundamentally restructure emerging market strategies and investment portfolios worldwide. For those currently holding Vietnamese Dong, this moment required a prudent and balanced approach, blending justifiable excitement with a strong dose of practical caution. It is absolutely essential to resist any temptation to rush toward unverified platforms or to accept exchange offers that appear suspiciously outside the official, confirmed central bank rates. Financial experts emphatically recommend that the safest and most intelligent course of action is to conduct all transactions strictly through officially authorized commercial banks, well-established and legitimate brokers, and registered foreign exchange platforms that are directly compliant with central bank guidelines. The enormous demand generated by such a pivotal event is likely to cause temporary delays, the occasional website slowdown, or increased documentation requirements as infrastructure strains to adapt to the volume. Maintaining patience is crucial while the financial infrastructure adjusts to the unprecedented surge in activity. If a bank's website appears slow or is temporarily offline, it is vital to remain calm, as this is an anticipated outcome during extraordinary financial movements. The recommended strategy involves closely monitoring official sources and considering the consultation of qualified financial professionals for guidance on tax implications and reinvestment planning. This successful currency revaluation in Vietnam is highly likely to trigger a domino effect of financial scrutiny across the region. Neighboring nations, including Laos, Cambodia, and the Philippines, are undoubtedly observing these developments with an intense level of interest and internal evaluation. Vietnam has provided a powerful demonstration that a carefully managed combination of sustained economic strength, political stability, and strategic international alignment can successfully elevate a currency from an undervalued position to one of significant global standing. Market analysts believe this moment could precipitate a broader regional reassessment of currency valuations, effectively shifting the global investment focus back toward core economic fundamentals over fleeting speculation. In a proactive effort to guide the public through this massive financial transition, the Vietnamese government has launched an extensive, nationwide education campaign. Recognizing the immense confusion and potential for fraud that accompanies such major financial changes, the campaign spans television broadcasts, social media outreach, community centers, and dedicated public hotline services. Citizens are being thoroughly instructed on the safest methods for exchanging currency, how to identify and avoid sophisticated scams, and how to fully understand the broader economic implications of their newly amplified purchasing power. This comprehensive communication strategy serves as an international benchmark for transparency and public protection during an economic upheaval. Perhaps the most deeply felt and profound impact of this event is on Vietnam's large and rapidly expanding middle class, which constitutes the essential backbone of the nation's economy. For years, this demographic has saved diligently, worked tirelessly, and persevered through inflationary pressures and limited access to complex financial tools. Now, their carefully accumulated savings possess dramatically more strength, their long-term investments carry significantly greater weight, and their overall financial opportunities have expanded exponentially. For teachers, factory workers, small business owners, and everyday families, opportunities like home ownership, access to higher education, improved health care, and entrepreneurship are now within grasp. As the celebration continues and the nation embraces its new financial status, Vietnam must navigate the path forward with disciplined care. A stronger currency inevitably introduces new responsibilities, including maintaining strict inflation control, ensuring long-term market stability, actively preventing the formation of speculative bubbles, and managing sustainable organic growth. Fortunately, Vietnam's established track record of cautious fiscal management and measured economic reforms provides strong assurance to international observers. If the country maintains this measured momentum and discipline, this revaluation will be historically remembered not just for its immediate financial gain, but for the profound wisdom demonstrated in its strategic and patient execution. This entire scenario underscores a major shift in psychology of global investors. As markets begin to actively reorient themselves toward verifiable, tangible economic indicators, the emphasis shifts, making regional cooperation and a focus on long-term structural value the top priority within the investment community. The government's role remains paramount, and by launching a sweeping national campaign designed to educate every level of society, they are skillfully mitigating the inherent risks associated with such a sudden and widespread increase in wealth. Essential tools in this process include daily television explanations of safe exchange procedures and social media infographics warning against fraudulent brokers, democratizing access to crucial information. The creation of a dedicated, highly accessible public hotline system designed to answer questions, verify information, and immediately report suspicious activity further emphasizes the government's commitment to public protection. This proactive layer of the events management highlights not only the complex mechanics of a currency shift, but also the crucial human element, demonstrating how clear messaging, proper education, and accessible information are vital for creating widespread stability during times of economic uncertainty. It stands as an instructive example of responsible governance during a large-scale financial change that directly impacts millions of lives. The transformation of the middle class remains the compelling central thread of this narrative. For years, workers, families, and small business owners pushed forward, managing household budgets with extraordinary discipline and working to build financial security in a rapidly developing economy. The revaluation strengthens their collective savings, increases their purchasing power across the board, and fundamentally unlocks greater access to a wide array of new opportunities. This event serves as a colossal symbol of empowerment, shaping a decisive moment in which the middle class sees entirely new and attainable possibilities for their future and the trajectory of their children's lives. As the nation stands at this critical crossroads where unprecedented opportunity and weighty responsibility converge, the inherent challenges of managing a stronger currency must be confronted with clear focus. Successfully controlling capital flows and rigorously ensuring market stability are paramount to actively avoiding the volatile speculative bubbles that frequently arise during periods of major financial excitement. The government must deftly balance the surge of national pride with a disciplined, long-term economic strategy, ensuring that all future growth remains sustainable and structurally sound rather than merely reactionary. Analysts widely point to Vietnam's historical track record of cautious fiscal policy and deliberate, measured economic reforms as a deeply reassuring sign that the government possesses both the necessary experience and the foresight to expertly guide the nation through this monumental transition. The ripple effects of a large-scale currency revaluation extend dramatically far beyond national borders, immediately beginning to reshape regional geopolitics. A significantly stronger Vietnamese Dong confers new financial and diplomatic leverage, enabling Hanoi to approach crucial multilateral negotiations from a position of greatly enhanced confidence and economic stability. This elevated stature is particularly relevant within the Association of Southeast Asian Nations (ASEAN), where critical decisions regarding trade alliances, investment frameworks, and regional infrastructure projects are frequently negotiated on a complex blend of both economic and diplomatic terms. Major global powers are now compelled to reassess their entire spectrum of economic, diplomatic, and security strategies toward Vietnam, weighing not just its crucial geographic value, but also its growing fiscal sturdiness. This fundamental recalibration is expected to lead key international partners to significantly expand bilateral talks, potentially adjust existing trade balances, or even entirely reframe global supply chain relationships in clear recognition of Vietnam's newly amplified economic standing. Furthermore, this dynamic could act as a potent catalyst for a broader rebalancing across the entire Asian continent, where nations that were previously overlooked may suddenly gain fresh attention as investors and policymakers re-emphasize foundational economic metrics such as institutional resilience and export competitiveness. The revaluation is therefore viewed as the potential opening act in a gradual, long short-term shift in Asian economic dynamics, driven not by overnight fortune, but by strategic policymaking and sustained structural reform. The economic uplift flows rapidly and effectively into Vietnam's burgeoning technology ecosystem, providing powerful momentum that accelerates user adoption and product innovation at a breakneck pace. Sectors such as fintech, e-commerce, and digital services are projected to experience a massive and transformative boom. A stronger national currency inherently improves consumer purchasing power and confidence, which in turn stimulates greater discretionary spending online. Mobile payment services and digital retail platforms are actively preparing for significant spikes in transaction volumes, a broader onboarding of new merchants, and an expansion of product offerings specifically tailored to the newly empowered consumer base. Technology startups focused on wealth management and microlending could scale much more quickly, buoyed by the better macroeconomic environment and an increased investor appetite for domestically rooted, innovative solutions. Remittances, which represent a vital economic lifeline for countless rural households and a significant component of the national income, also gained substantially in real terms. Money sent back home from abroad now stretches considerably further, enabling families to invest meaningfully in housing, educational opportunities, improved health care, and small business ventures. This new financial dynamic has the potential to elevate entire rural provinces, catalyze local entrepreneurship at the grassroots level, and simultaneously reduce the intense urban migration pressure by enabling more robust and sustainable livelihoods in the country's hinterlands. Digital platforms and traditional remittance corridors interlock to powerfully amplify the social and economic benefits of the monetary shift, decisively widening the circle of beneficiaries from the bustling city centers to remote communities across the nation. Finally, the reaction from the large Vietnamese diaspora communities, stretching from California to Sydney, Berlin to Toronto, is a deeply emotional mix of national pride and intense practical engagement. These communities are effectively becoming rapid transmitters of economic optimism and verified information back to their families and network contacts at home. Expatriate groups are actively hosting celebratory events, and community organizations are convening informational webinars to explain the complex tax implications and the safest protocols for cross-border transfers. For countless overseas Vietnamese, the Dong has always represented much more than a simple medium of exchange. It is a profound symbol of national identity and enduring heritage. This revaluation carries immense emotional weight, visibly deepening transnational bonds and prompting a renewed, strong interest in homeland investment opportunities. As we observe this historic financial event unfold, the only truly prudent course for all is to observe, consult with verified sources, and plan diligently, relying exclusively on transparent, officially sanctioned channels for all critical financial decisions.